So we're going to copy that, going to put this over here in J26, right click, paste, 1, 2, 3, and the credit will be for then the amount that is in there of a negative for the credit, 530,000. Now, of course, we have an uneven debits and credits. The credits are winning by that 80,000. They're winning by what we are going to call the loss. That's the loss on the sale because we sold it for less than what we had it on the books for. Therefore, we're going to need another debit here. That debit will be the loss. In this case, notice over here in the worksheet, we allocated that loss directly to the capital accounts. We could do that here, but first, I'm going to record it as we basically would record it if it was a normal business transaction into the loss on the income statement. See the loss on the income statement, then allocate that loss in a closing type process to the capital accounts in this format. So let's see what that would look like. If we sold inventory at a loss, we would then record the gain or the loss here on the income statement in N33 in this case. Right click, copy. I'm going to paste that in J27, right click, paste 1, 2, 3. We know the loss is that debit of 80,000 here. I'm going to do what I call like the plug formula to calculate that 80,000, which will be summing up these cells and flipping the sign. So if I summed these cells, it would be a negative 80. We want a positive 80. Therefore, instead of selecting equals, I'm going to select negative and then sum of these four cells. So the 450 minus the 530 gives us 80. So it's going to flip the sign, and we already knew it was going to be 80, of course, because that's what we needed in there. I'm just going to use a formula to do so. Now if we highlight the two debits, they add up to 530, which is the credit. And if we highlight all of it, it adds up to 0, so we are in balance. Note here that I put this amount on the bottom, even though it's a debit. And again, some people, that could disturb some people. Like I say, in my opinion, that helped me to think through the process to build the journal entry. So that's why I put it in that format, and it helps us to put that kind of plug formula in the gain area. So if you're working in a lot of programs, it's not going to matter if it's not in order with the debits on top and the credits on the bottom. However, if you're putting the information into something that's going to be automatically graded in some kind of format, you may want to put the two debits on the top so that you're not marked off for just properness of debits on top. All right, so let's post this out. We're going to post the cash first. Here's the cash. Here's the cash here. We're going to post this to the adjusting column in P25 by saying equals and point to the cash of 450. That's a debit. This is a debit. It's going to make the debits go up in the debit direction, like so, and put us out of balance down here. We will then go to the inventory. The inventory is right here. It's right here on the trial balance. We're going to go into the blue area in P26 and say equals. Point to that inventory. What's going to happen to inventory? It's going to go down to 0. So the inventory is now off the books. We have now sold it. Then we're going to report the gain, which is going to be the loss. In this case, it's a loss. We lost money. And that's going to equal the 80,000. So 80,000 is going to go up in the debit direction. And we're representing a loss, meaning that we lost money. That's represented by a debit on the income statement. Now we're going to do kind of like the closing process. We're going to close out what's in net income, in this case net loss, 80,000, to the capital accounts of our three partners in accordance with their profit sharing, which of course will be this calculation that we did over here. So the loss needs to now be closed out. This is kind of like the closing process. It's got a debit in it. We need to make it go to 0. Therefore, we're going to do the opposite thing to it, which in this case would be a credit. So I'm going to copy that, copy it, and I'm going to try to put this credit on the bottom, so that's going to be to do it the proper way. So I'm going to skip a line, go to the new account, then I'm going to skip 3 more lines, 1, 2, 3, because that's where the capital accounts will go. And then I'm going to right click and paste 1, 2, 3. So again, you could put the credit on top. It's not really going to disturb anyone. I mean, it's not going to be wrong technically if you put the credit on top, as long as you're in the credit column. But we'll try to put this on the bottom, and that's going to be the negative 80,000 that we will credit it to make this go to 0. Then what's the debit going to be? We're going to debit something 80,000, and of course that will be these 3 capital accounts in accordance with their profit sharing percentages. So let's copy these three. I'm going to highlight these three capital accounts for the three partners, copy it, and put that on top. So we're going to put it in J29, right click and paste 1, 2, 3. All right, now we've already calculated the percentages that we need to debit, 40, 26, 667, and 13,333. I'm going to recalculate them here just so we can see that one more time. So what I'm going to do is say negative, because I want to debit, I'm going to say negative of this number. That'll take the 80, flip the sign. Then I'm going to multiply that for K times K's capital account over here and enter. And we come up with this same 40,000. Notice it's a negative number here and it's a debit over here because the debit is what's going to reduce the credit capital account on this worksheet. So this is a plus and minus worksheet. This, of course, is a debit and credit worksheet. So then we're going to do the same thing for C. We're going to say C, I'm going to say negative instead of equal to take that 80,000 and flip the sign times, and then we'll point to C's capital balance. The 33.33, that'll give us the same 26,667 we had here. Note then, again, that because we multiplied it times this cell, then it's going to be slightly different than if we just multiplied it times 0.3333 because of rounding. We're going to do the same thing for M. I'm going to say M is a negative of this 80,000 times, and then we're going to point to M's capital account, this 1667, and enter, and that gives us our 13,333, which matches this number here. Do our debits equal our credits? Let's take a look. Debits tie out to 80,000 equals the credit. If we highlight all four of them, the debits minus the credits equal 0. All right, let's post this out and see what happens, see if it does what we expect it to do. What do we expect it to do? We expect the gain to go away and closed out to 0, and we expect the capital accounts to be decreased from where they started out to these numbers here. All right, let's see that, and so we'll post K first. So here's K's capital account, here's K's capital account on the trial balance. We're going to post it to the entries column by saying equals, then point to this 40,000. That's a debit, this is a credit, those are opposites, meaning it's going to make it go down to 53,000, which matches our worksheet over here. We're going to post C then. Here's C on the journal entry, here is C in the trial balance. We're going to post it to the middle column, being P29 equals, point to the 26,667. That's a debit, this is a credit, it's going to make the credit go down to 185,833, which matches our worksheet. Then we're going to go to M. We're going to say M is here. Here it is on the trial balance. Here's where we're going to post it in the entries column. Equals. We're going to point to the 13,333. What's going to happen? It's going to bring this down to 153,667. Matches our worksheet. Now we're going to report the gain. Here's the gain or loss. The loss in this case. And we're going to post that here. There's something in it. Therefore, we're going to double click on it. Go to the end of it. And say plus and point to that 80,000. So we have 80 in it. It's going to go down because we're doing the opposite thing to it and put it back in balance like so. So now we've allocated this out and we can see that we have our allocation of the capital accounts to our partners matches our worksheet over here. We can now go to the next step. What's the next step? We're going to pay off now the payable account. We now have the cash to pay off the payable account. We'll do this in two ways. We'll do it with a worksheet, then we'll come over here and do it with the journal entries. And again, some people prefer one or the other. We'll do it both ways so we can kind of see what it would look like. So we're going to pay off the liabilities. Liabilities are going to be here. We're representing liabilities, which is to simplify just one account, the payable, the liability account of 240. We've got to pay that with the cash now. So that's going to go down to 0. So we're going to pay off negative 240. This is going to go down to 0. What's going to happen to cash? It will also go down because we're paying cash. So negative 240, like that. Then we're going to subtract this out. Now note, we don't care about this stuff up here. This is old news. What we're looking at is the previous balance. This is where we stand as of this point in time. And then we're going to post our activity. Then we're going to have our new balance. This is where we stand after this activity of paying off the liability. So let's do that calculation then. We're going to say this equals and point to the 632.5 plus, and note that this is a negative number. So we're going to say plus that negative number, which is a subtraction problem, bringing us down to the 392.5. We're We're going to do the same thing over here in E. We're going to say this equals, point to the 240 plus this negative number, and that'll bring it down to 0. And then we're just going to bring these capital account balances down. There's no effect on the capital accounts, so we're going to say that this equals the same 53 tab. C, this equals the same 185,833 tab. And then for M, this equals the same 153,667, and enter. So here's our information. We're going to do this with a journal entry now and do the same kind of transaction, and we should end up with cash at the end of the day and a capital account distribution in this format, which is the same as where it was last time, and of course payable will then be at 0. So let's think about this in terms of the trial balance. So in the trial balance, what are we doing? We're paying off this liability with cash. So is cash affected? Yeah, we're paying cash to pay off the liability. Cash has a debit in it. We're going to make it go down because we're paying it. So we're going to do the opposite thing to it, which in this case would be a credit. So I'm going to copy the cash. We're going to skip a line. We're going to skip another line so we can put it on the bottom. And then we're going to put it down here on J35. Right click and paste 1, 2, 3. So we're going to be in the credit side. We're going to post the credit for the amount that's in the payable of the 240. So it's a negative 240,000. Then we're going to debit 240,000 to the payable. Why? Because it has 240,000 in it. We're going to pay it, therefore it needs to go to 0. How do we make something go to 0? We do the opposite thing to it, which in this case is a debit. Therefore, let's copy this account in N25 and paste it to J34. Right click and paste 1, 2, 3. All right, so then we're going to post this out. So we're going to post the payable. Here's the payable. Here's the payable on the trial balance, and we're going to post it to the entries column in P27. P27 equals, going to point to this 240 in accounts payable. That's a debit. This is a credit. Those are opposites, making this go down to 0. And we are, of course, out of balance. Now we're going to post the cash. Here's the credit to cash. Here's cash up here. Here's where we're going to post it in P25. There's something in there already. Therefore, we're going to double click on it. We're going to go to the end of it, say plus, and then point to that 240. That's a credit. This is a debit. Therefore, it's going to go down. Put us back in balance down here. There we have that. Now, note what we have left. We only have cash of 392.5 and our capital balances here. All we need to do then is pay the cash to the capital balances. So we will then pay that out. Do want to point out here that note that these capital balances that are left over are not in relation, in proportion to the profit sharing percentages. Keep that in mind, people. That's easy to get them that mixed up. And that is because these are the profit sharing percentages, meaning that when we allocate the profit, it will be allocated in this format. However, the partners can take out money at different ratios. They don't have to follow those ratios for when they withdraw the money that is owed to them, reflected by the capital accounts, necessarily, depending on the partnership agreement. But so note that this balance does not necessarily reflect this ratio. Also note that we are now going to be allocating cash. That cash we're going to be paying like a draw, paying the draws out, which is different than when we allocate net income. When we allocate net income, we do allocate according to the profit sharing. Now we're paying out the amount of cash that is left. We're going to pay out in accordance with whatever is owed, represented by the capital accounts. All right, so let's do that with a worksheet first. So we're going to do that over here. Cash is going to go to 0. We're going to pay all of it out in accordance to these ratios here, these capital account balances. Therefore, we're going to say negative 392,500. And then we're just going to pay it out in accordance here. And of course, these add up to 392.5. So we're just going to make this go to 0. And again, we're worried about this balance. Then we're going to do the transaction, which is going to make everything 0. And then we're going to have the new balance where everything is 0. So we're going to go here and say this is going to be negative 353,000 tab. This is going to be negative 185,833 tab. Negative 153,667, and enter. So then we'll just add these up. Oh, undo. We're going to be over here in C32 equals, point to the 392.5 plus the negative 392.5, bringing us down to 0. Same thing over here, we're in F32 equals the 53,000 plus the negative 53,000. I'm going to select tab this time, go to the next cell, equals, we're going to pick the 185,833 plus the 185, the negative 185,833 tab, equals the 153,667 plus the negative 153,667, and enter. So now we're at zeros here. We've closed out. We have now liquidated. We'll do the same thing over here. Let's see the same activity in terms of a trial balance. So now we're left with cash. We're going to pay off the 3 capital accounts. Cash has a debit balance. We need to make it go to 0 because we're going to completely pay it off. Therefore, we're going to do the opposite thing to it, which in this case is a credit. So I'm going to right click, copy. Now I want to put it on the bottom again. So if to put it on the bottom, I'm going to skip a line. And then I'm going to skip 3 more lines, 1, 2, 3 for the 3 partners. And then so the 3 partners are going to go here. And it's going to go on the bottom. I'm in cell J40. Right click, paste, 1, 2, 3. And we're going to pay out the entire amount that is in cash of the 392.5. Therefore, this will be a negative 392.5. And we will then pay out the partners not in accordance with their profit sharing ratio, but in accordance with what is owed to the partner represented by the capital account balances here. So we're going to take these 3 partners, we're going to copy those, right click and copy. We're going to debit those accounts, making them go down. We're going to paste that to J37, right click, paste, 1, 2, 3. And I'm just going to put the amounts that are in their capital accounts. So K has 53,000 in the capital accounts. That's what we're going to debit. C has this 185,833. And M has in the capital account 153,667. Do the debits equal the credits? If I highlight the debits, they add up to 9325 in the taskbar. That's what the credit is, so they look equal. If I highlight the debits and the credits and subtract them, they add up to 0. Therefore, the debits equal the credits. And we're going to post out the K capital. So here's K. Here's where we want to post it. There's something in it. So I'm going to double click, go to the end of it, say plus, point to that 53 debit, making this credit go down. We will then post C. So here's C, here's C, here's where we want to post it. Double clicking, going to the end of it, plus this 185,833, making this go down. Then we're going to post M here, here's M here, here's where we want to post it. Double clicking, going to the end, and plus, pointing to the 153,667, making this go down. Then we need the last one. We're going to post the cash. Here's cash. Here's cash. Here's where we want to post cash. Something's in it. Therefore, we will double click on it. Go to the end of it. And plus, we're going to post this 392.5, bringing this down. And we're back in balance. Note that now we have all zeros because we have now fully liquidated the partnership. So recap of the process of liquidating the partnership. We will first sell the inventory. Then we will record the gain or the loss. We will take that gain or loss and allocate it to the partners, these 3 partners in this case, in accordance with their profit sharing agreement. We will then take the cash that we have received, pay off the liabilities that we owe, in this case just the one to accounts payable. Then we'll be left with just cash and the capital accounts. Then we'll pay off the capital accounts in accordance with what is owed, represented by what is in the capital account, which doesn't necessarily tie out, which probably most likely will not tie out to the profit sharing percentages. Why do we do it in that way? Because if we do not do it in that way, then it's very possible that we pay out too much to a partner, and then we could sell the inventory for, if we sell it for less than we thought, we could be in trouble by the fact that we already gave out the money to a partnership and didn't realize that we were going to end up with a loss that will cause us trouble. So that is that.